Is Dangote Refinery's recently announced expansion plans a big mistake? Golden questions. 1. Major international oil companies, IOCs, like BP, Shell, and ExxonMobil have significantly reduced their workforces and scaled back investments over the past decade, a trend attributed to market cycles, digitalization, and the energy transition. If these companies with vast resources are pulling back from aggressive oil production growth, what do they see about the future of demand that new entrants might be underestimating? 2. With countries responsible for a large share of the global car market, including the entire European Union, the UK, and Canada, legally mandating a shift to 100% zero-emission new vehicle sales between 2030 and 2040, how can multi-billion-dollar investments in new refineries today be justified against a foreseeable drop in demand for their primary product within the investment's own payback period? 3. For decades, the global oil industry was dominated by Western majors and state-owned giants. Does their current strategic pivot away from oil production represent a genuine opening for new players, or is it a calculated retreat from a sector they anticipate will offer diminishing returns, leaving new entrants to bear the brunt of a declining market? 4. The Dangote Group's plan to double its refinery capacity to 1.4 million barrels per day is a monumental bet on the long-term viability of fossil fuels. Given the International Energy Agency's (IEA) projections of falling oil demand, what is the realistic plan to avoid this world-class asset becoming a financial liability, stranded asset, if the energy transition accelerates faster than expected? 5. The oil and gas industry creates relatively few direct jobs but supports many more indirect and induced jobs in local economies. If a large-scale refinery investment falters in a declining market, the impact would extend far beyond the refinery's direct employees. How do we account for and protect the wider community, from service contractors to local businesses, that would be affected? 6. Wealthier nations are investing heavily in domestic EV supply chains and battery manufacturing, with China currently dominating this new industry. As the world moves toward electric transport, what concrete, actionable strategy is in place to ensure that countries like Nigeria, which are investing in the old energy system, are not left with a contracting oil sector and no foothold in the new, clean energy economy? Golden question. Considering the coordinated Western pivot to electric vehicles and the strategic retreat of major oil companies, are investments that double down on fossil fuel refining capacity a bold declaration of energy independence, or a catastrophic miscalculation that will leave developing economies holding the short end of the stick in the global energy transition? Is Dangote being allowed into an arena that has already been marked for the graveyard?